for that introduction. I apologize up front in case if you see me start coughing. I've had this nasty cough for some time now, and it doesn't seem to shake off, but I am not contagious, so if I do shake your hands, don't worry about it. Welcome to KPMG, welcome to this event. Nice to see all those folks that have turned up. I'm going to talk about SHRED and digital media tax credits. But before I do, I want to, hold on a second, let me just figure out how this thing works. I think I got it. Yes, so here's our agenda. There are two sessions, as you heard earlier. I'm focusing on the incentives piece, and then my colleague, Michael Hindley, is going to join me in discussing the credits and so on. He's an accountant, I'm not, so I'll leave the accounting part to him, and I'll deal with the technical aspects of the programs. Before I go, my value proposition, or I guess our value proposition in the R&D tax practices, we help clients get money back on money that they've already spent with little or no out-of-pocket cost or risk. So that's our value proposition. It works very well because people want to know how do I get money back from the government. And this is without having to spend more money, because in consulting, where I used to be before, we would always tell our clients, well, you got to spend money to either save money or to get some benefits down the road. But in what I do and what we do, that's not the case. We actually help you get some funds back, whether it's cash or tax credits, doesn't matter. I just wanted to highlight a few things. Canada is probably the most lucrative place in the world, well, amongst the most lucrative places in the world to do business, from a tax incentives perspective, that is. And I think later on, Sentinel might tell you that even without that, we are doing pretty good with our tax rates going down and whatnot. So just for your interest, for example, the government provides about over $6 billion in incentives for business innovation. That is primarily for R&D, product development, innovation, etc. As far as the SHRED credit program is concerned, there are over 20,000 businesses that take advantage of this program. And the purpose of this program is to promote innovation, is to encourage small and large businesses alike to take technology risks while they're developing new products and exploring new markets. Really, there are programs that are out there, and excuse me, and they're at all levels of government, from federal to provincial to even municipal. And in the end, that you can get up to 70 cents on the dollar back on eligible labor expenditures that were incurred under the SHRED program. And I think that's what resonates very well with people, well, especially with small businesses, because this is cash money that you're getting back on money that you've already spent. And why not? Here's an overview of different programs and incentives that are available as a company sort of evolves from, from going from left to the right. As you can see, for basic and fundamental research, there's the SR&D program, which I'm going to be talking about. And then as you evolve into applied research, you can still tap and SHRED and other programs. And then as you evolve into developing your product, coming up with prototypes for demonstration and so on, you can still take advantage of SHRED and IRAP. And as you move forward, there are other programs that are out there. Now that's at the federal level. At the provincial level, and the very first box that I'm going to be talking about as well, at the provincial level, there are a whole bunch of programs that are available for businesses. Again, the idea being that the governments have certain policy objectives, and in order to promote those policy objectives, they come up with these incentives. So you can see there's a whole bunch of them. We're not going to be talking about all of them, but there's lots there to take advantage of. So the first part of the presentation is on SHRED, and I'd like to first explain to you what it is, provide you the high-level overview. SHRED is a mouthful, and that's why we call it SHRED. It really stands for Scientific Research and Experimental Development. For the most part, the scientific research part is a very small portion of the overall program. That is targeted at primarily at research institutions and universities and so on. For people that are in business, world, it's the latter half, which is experimental development. What it really means is, as you are creating your new products and services, you might be hitting roadblocks from a technology point of view. And when that happens, through experimental development process, if you overcome those obstacles and hurdles, that work qualifies under the SHRED. The second one is the Interactive Digital Media Tax Credit. It's a tax credit intended to promote the digital media industry in the province of Ontario. It's a provincial credit. It's also very lucrative. Between 35 and 40% of the labor costs incurred in the province of Ontario are refundable as tax credits. So just to dig deeper into the SHRED program, as I said earlier, it's really to encourage and provide incentive to businesses, large and small, to be at the forefront of technology, to expand the technology envelope, and in doing so, hopefully create more jobs down the road, which ends up more economic activity, which means people are paying more taxes, et cetera, So it's the government's way of helping businesses so that they can grow and flourish, and in doing so, they will serve the policy objectives of creating more jobs, making Canada, at the forefront of R&D. As I said earlier, about 23,000 claimants, and last year, approximately $4 billion in tax credits was handed out. Now that's pretty significant, and it so happens what happened that in Ontario. In terms of what qualifies, as I said earlier, the claimant or the company must undertake some work that is intended to advance certain technology, whatever technology they may be working in. It could be IT, it could be food and beverages, it could be oil and gas, it could be pharmaceuticals, you name it. Pretty much every area of technology is covered under that program. And as long as you're doing work that is not routine, meaning if you know exactly what to do and how to get it done using the knowledge that is available, then that's not R&D. However, if you are doing something and you run into some sort of obstacle, or you try to do something with the technology that it was not intended to do, then you are then you are exploring this R&D space, and that's what is eligible. It doesn't have to be rocket science. The gains can be incremental in nature, so it's not like you need to come up with something huge and big. Small incremental gains, as long as they were not obvious to people that were doing the work, would qualify. And as I said earlier, it's really hitting the roadblocks and so on. So if you have a project where you're executing on it and everything goes without a hitch, then there's no R&D. The minute you run into issues and problems, that's where there's R&D. Moving on. In terms of the criteria, the government asks you to meet these three sets of criteria. One is that there has to be some sort of obstacle or uncertainty that I talked about. The flip side of that is that if you're able to overcome that obstacle or uncertainty, then you have actually attempted an advancement in the underlying technology. So it's looking at the same side of the, it's looking at the two sides of the same coin essentially. Because there was an uncertainty, therefore there is an advancement if you are able to overcome those goals. If you are not, it is still an advancement, because had you known your approach would not work, you would not have tried it. So it's all about going through the process of what's called systematic investigation, which is the third step, which basically says that you're not just doing trial and error. You're not just hacking your way into some solution. You're actually using a systematic approach to solving a problem, which is what we all do, especially when you're working in areas of science and technology. So when we help our clients argue for eligibility, these are the three elements that we are focused on. We try to understand what were the problems that you encountered, what did you do to overcome those, and then from that we are able to derive what was the underlying advancement, which is really the knowledge that was created or that was obtained as a result of that process. In terms of the what is eligible and so on, the tax credit, it has two different rates. There's a federal rate at either 20 or 30%, 35%, pardon me. 20% is for large companies like the banks and what have you, public companies and so on. The 35% is for what's called CCPC, a Canadian Controlled Private Corporation. So if you're a small business, you will very likely fall in the 35% category. So that's the tax credit. If you are a CCPC, you get on top of that provincial credits that range from 10% in Ontario to 37.5%, which I believe is in Quebec. Provincial governments piggyback on this federal program, and they also offer their provincial tax incentives. So for Ontario, for example, you get 10% OITC, which is Ontario Innovation Tax Credit. There's another credit on top of that, which is called Ontario Research and Development Tax Credit at 4.5%. Anyway, when you do all the math, what you get in the end is $1 of labor expenditure, you may get between 39 to 73 cents on the dollar back. And the 39 cents is really for those non-CCPCs, and 73 cents would be companies at the other end of the scale, CCPCs. In terms of what are the eligible costs, of course it's the salaries, that's the biggest portion. However, if you're doing some research and development where you are consuming materials and so on, those material costs are also eligible. If you're making contract payments, so if you hire somebody to work on your behalf, providing they are doing this for you, and there are certain requirements around that you own the intellectual property, etc., you're taking the financial risk, then those costs are also eligible. So it doesn't have to be just your employees, but also the costs that are incurred by hiring contractors. If you acquire new capital equipment that is used in pursuit of R&D, that would be eligible as well. The trick here is that it has to be used 50% or more. If it's less than 50%, then it's not an eligible cost. So, for example, for companies that are in, say, IT space and they're building software or games, any hardware, software that they acquire, servers, etc., that are used in their development and testing environments but does not go into production, that cost would be eligible for R&D. Leases, you don't have to acquire the equipment, or you don't have to buy the equipment, you could actually lease it, and that would qualify as well. Third-party payments is a technical term, I won't get into that right now. And lastly, there's this notion of proxy method. What basically it says is that in addition to paying your staff, your salaries and so on, there's an overhead that is incurred by the company. The government allows you to increase your labor costs by 65%. So really, $1 spent on labor really becomes $1.65 of eligible expenditures, and that's when you multiply that by the rate, you end up with 73 cents or 39 cents on the dollar back. So you see how the multiplier works. Anyway, if you don't, we can talk about accountants there. Get into that. But suffice to say that for companies where you have lots of labor and you're not using as much materials and so on, it makes sense to pick the proxy method of calculating your costs, because you just multiply your labor costs, internal labor cost, that is, by 65%. Now I'm going to switch gears, and maybe what we'll do is we'll leave the Q&A at the end, just so that we keep up with the pace here. Now I'm going to switch gears to the second program, which we do a lot of business in, and that is the OIDMTC, which stands for Ontario Interactive Digital Media Tax Credit. And essentially, unlike the SHRED program, where the costs would be labor and materials and capital, etc., this is strictly for labor costs only. So if you have a company, for example, if you are developing a product that is interactive in nature, that is intended to either educate, inform, or entertain the end user, and I'll go to examples in a minute, then very likely that product would qualify under the OIDMTC program. And what that means is that for all the costs that are incurred in the process of Ontario, you can get between 35 and 40 cents on the dollar back. And that includes the half of the contract amounts before March 09, but now it's 100%. So it's labor cost in Ontario, incurred in Ontario, both internal labor or contractors. In addition to that, if you are building a product, an interactive digital media product, paid as fee for service, say you're building a game, for example, and you intend to market that game, you intend to promote it and so on, there is additional $100,000 of expenditures available. Now that's the cap. So you can incur up to $100,000 and get credit on that amount. This would include things like advertisement, things like going to some gaming convention or whatever to promote your product, etc. So a whole bunch of costs that are not incurred in creation of the content or the product can be added as well. And what's really good about this program is that you can actually go back 37 months. So for example, if you have launched your product on December 31st, 2011, let's say, you can go back over 3 years and capture all the costs that were incurred in producing that product and file a claim. So some of our clients, they can go back and they have some massive costs that have incurred in creating these products, and as a result, their credits are pretty significant as well. So I talked briefly about, there are two different types of products. One is what's called specified product, which is fee for service. Essentially, somebody is paying you money to develop a product on their behalf. If you are working under that arrangement, then the credit is at 35%. The other one is where you are not working for somebody else, but you're creating your own product, and the credit there is 40%, which is the next slide. And again, I already covered the fact that it has to be labor expenditures paid to individuals that live in Ontario, and you can go back 37 months. Sorry, I think this slide should have come much earlier, but anyway, I'll talk about it now. The eligibility criteria for the product itself is that the product, and the product could be any of these things that are at the bottom here, which I'll talk in a second, but the product has to, its purpose has to be to either educate or inform or entertain the end user. So for example, if you have an interactive website, say a magazine, McLean's.ca, for example, would qualify as an interactive digital media product because it is interactive in nature, i.e. you can go onto the screen and under your browser you can navigate, there's interactivity there. You can click on something and something else will show up and so on. It consists of, in fact, virtually every website these days or every digital media product is got sound, text, and or images. It has to be interactive, meaning you cannot claim development costs for a YouTube-like application because the government does not consider YouTube-like application where all you have is where the interactivity is restricted to what's called the VCR controls, where you stop, pause, fast forward, rewind, etc. That is not considered interactive. So that's the only thing you have to be careful of when you're dealing with interactivity. And the last point is that it cannot be intended to promote your own products and services. So for example, Labatt's.ca might have a very interactive website where they talk about all their beer products and what goes with what, etc., etc. The fact that they're in that business, even though it is providing information to the end user, even though it has, it meets the second criteria about the text, sound, etc., even though it's interactive, the fact that it's promoting the products and services of the qualified corporation would not be eligible. So something you have to keep in mind that if you do have a product, as long as it's not promotional in nature, then you're good. Some of the examples of interactive digital media products are listed there. As I mentioned, online magazines and journals, newspapers, so globeandmail.com or .ca, for example, would be considered as an eligible product. Clearly, the video games and all sorts of mobile applications on your iPhone or BlackBerry or any smartphone device would qualify. Websites I already mentioned. If you are in the business of creating e-learning products, those would definitely qualify. And anything you can create that sits on either it's delivered through a kiosk or a CD-ROM or a DVD, that will also qualify, as long as it meets the criteria that's applicable. So now I'm going to turn it over to Michael Hindley, my colleague. He's actually going to get into some specifics around the financial aspects of these things and talk about some of the tips and traps and ideas on how to maximize and shred and digitally attach credits. So Michael, over to you.